Bitcoin trying to join today's rally, moving higher this afternoon. This after a very rough weekend that saw Bitcoin drop as low as $42,000. According to estimates, more than $1 billion in long positions were liquidated on the price drop as trader sentiment plunged. Joining us now, Frank Chaparro, Director of News at The Block, and CNBC's Kate Rooney. Kate, how do you explain what happened over the weekend?
So the best way to describe it, and what I'm hearing, is a flash crash. We've seen this dynamic play out a couple times this year. It happened back in May. We saw it happen in September. And it comes from crypto derivatives. So there's leverage out there. It really got flushed out of the market. Like you said, some of those long positions were closed. It comes from futures, options, and a lot of this action is happening offshore. It's very much a global asset. So when you've got one big liquidation event, so say it's some Bitcoin whale selling, it tends to start sort of a cascade. So it triggers more selling. Fundstrat had some estimates out there about $2 billion in long positions across the entire crypto market being liquidated. We see this sort of spiral effect. One person sells, it triggers sort of a cascade. Someone called it a liquidation train. We have seen this dynamic play out. It really exacerbates some of the selling. And we saw Bitcoin fall by about 20% in it was something like 40 minutes. So just these aggressive declines. It does look to be finding support near its 200-day moving average where it is right about now. But that's the big question now. Is this a bottom? Is it at the start of a bear market, or are we looking for a bounce here? So I think that's still an open question.
Well, bouncing a little bit today. Frank, Kate says it's the liquidation train that it looks like it ran off the cliff, that train. Do you have any sort of difference of opinion with what Kate said? That's number one, as to why what happened over the weekend did. And number two, what's the lesson of it for people like me or ordinary investors who are either in or want to consider getting in to Bitcoin or a similar coin?
Totally. I think Kate's exactly right. You have two parts of this equation. The first part is that institutions looking at a shaky macro investor wanted to take some money off the table Friday. A lot of money was taken off the table. And on the other side of the coin, maybe pun intended, are the retail traders who are over-invested in this market. They can't really take it anymore, and they're certainly over-levered. If you look at the offshore exchanges, we counted over $1.8 billion in liquidations that happened over the course of Friday and Saturday's trade. And the reason for this, the thing to keep in mind for investors looking at this market is these cycles will continue to play out for three reasons. The first of which is there's higher volatility in crypto. There aren't circuit breakers that we have in traditional finance, so nothing that can keep a floor after things start going down really, really quickly. And the market never closes. So there's not really an opportunity for information to be digested once this cascading effect takes hold.
Shepard Smith here. Thanks for watching CNBC on YouTube.